What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. I wanted to talk about what you should do with respect to the coronavirus fears and the short-term effect that it's having on the market. Obviously, it's becoming a more widespread issue as there are cases now reported in Europe, mainly in Italy, and also in Iran. The markets today have obviously taken a hit because of this, because of the panic selling. The NASDAQ is down 4%. The S&P is down almost 3.5%, and the Dow Jones is down. Let's look at the Dow Jones, but the Dow Jones is down 3.5% as well. So we haven't seen drops like this in a very long time, probably since I want to say August of last year. Let me look. Yeah, it was last August when we experienced a similar drop. So funny enough, on the S&P, I drew this bearish divergence last week, expecting that there would be a drop here, because of the coronavirus, but just because the market is extended. When the markets are extended and when traders feel like we're on the brink of a correction, it doesn't take much to tip the markets over. So I want to go over how it is that I'm handling this in the short term, what it is that I'm looking at. And obviously, I'll take a look at Bitcoin's analysis too. We just made 10% on a Bitcoin long after it hit this support level at around 9,500 and got up to 9,600 on a 10x long. That's around 10%. So quick and dirty swing trade on Bitcoin. And again, if you want access to these trades, whether we're talking about crypto stocks, Bitcoin, crypto stocks, options, whatever, that link is in the description where I send out all of my trades. So basically, I want to repeat a sentiment that Warren Buffett issued today. He said, the real question is, has the 10-year or 20-year outlook for American businesses changed in the last 24 to 48 hours? And of course, he's insinuating that it hasn't, meaning don't use the coronavirus headlines as your impetus for buying or selling stocks. Now, for day traders and swing traders, obviously, it's a completely different story. We're just talking about investing here. And events like this, they're actually a great opportunity, for lack of better terms. There's nothing great about a virus outbreak, but when markets tank like this in the short term, there is a good opportunity to pick up established growth stocks at a discount, right? And I'm talking about the Boeings, I'm talking about Apple, Microsoft, etc. You want to stick to companies like that and start dollar cost averaging in the event that they keep dipping, right? Because you're essentially getting these growth stocks at a discount. So in 5 to 10 years, do you expect Microsoft to not be higher than where it is today? Same thing for Amazon, same thing for Boeing. And you really want to stay away from emerging stocks that don't have great balance sheets, right? Such as some of the smaller biopharmaceutical companies that haven't recorded a profit yet or don't have much cash flow. The Russell 2000 is actually a good index for this. This is basically an index of small cap stocks. So in the short term, you want to stay away from opportunities like that, right? You want to start exposing yourself to longer term opportunities, which you can buy at a discount currently. Now, in the short term, there are certain things you can do from a bearish standpoint. Obviously, I mentioned the TVIX earlier, right? So this is an or did I mention it earlier? I don't know. But anyway, the TVIX is basically an ETF that trades off of volatility. So when there's volatility in the market, this goes up. And this is currently up 34% today. You see this jump here. And we haven't been significantly above the 50 MA going back to August, that time that I was talking about when we saw a drop in the stock market. So there's a good chance that we hit the 100 MA here, get slightly above it. So there might be good opportunities in the TVIX. Oil is something that I would stay away from now, right? I mean, one of the major effects of the coronavirus is that it hit really the epicenter, besides the United States, it hit one of the epicenters of global GDP. So this article on CNN says, with Japan already reporting hundreds of infections, 4 of the world's top 12 economies representing about 27% of global GDP are now scrambling to contain the virus. So really, the virus couldn't have hit in a worse place if we're talking about the global economy. China is the largest consumer of oil. They're number one in terms of manufacturing and production. They're one of the largest exporters in the world. So because of that, you see oil tanking today. Crude oil down almost 4% today. Now, there are ways to hedge against this, right? You can go with DWT, which is an inverse ETF. So when oil tanks, DWT actually rises. And you see DWT is up almost 11% today. Again, for all these plays, sign up if you want access to the trade alerts. Link is in the description. Now, in terms of the effects that I think this will have, obviously this is somewhat of a black swan event, and it's too early to tell the effects that the coronavirus could have. I mean, the cases in Italy, the 200 or so cases in Italy, nobody expected that. That was almost reported overnight. So, there could be pockets of the world where these outbreaks happen and are discovered relatively suddenly. And if the outbreaks get worse, as I mentioned earlier, right, that the four of the world's top 12 economies, 27% of the global GDP, right, in these countries is where most of the outbreaks have occurred. If that's the case, and with Germany already teetering on the brink of recession, I mean, it definitely could be a recession-inducing event, right? If the world economy is basically put on hold because of this, there's almost nothing that anyone can do in terms of, the Fed lowering interest rates or some of these quantitative easing measures, right? That there's almost nothing you can do because you're completely beholden to the virus itself and the effects that it might have on the global economy. So in my view, it's too early to tell. You can't predict this. I will say, barring any major reports of new outbreaks or worsening outbreaks, I do think that the market will bounce back. We are at a clear, if we're just using the S&P as an index here, we are at a clear support level that we've seen going all the way back to December 2019. And we've seen this before where the S&P tests highs multiple times, retraces for one reason or another. Again, when the market is perceived as being overextended, it doesn't need much of a reason for it to fall in the short term. So, you see it where it retests highs multiple times, retracing, going back to retest highs before finally breaking out. So this definitely is the coronavirus outbreak could be the impetus for us seeing that retracement, going back to possibly test these recent highs, seeing a retracement again. This cycle could last for months. Now, if we break this support level here on the S&P 500, then, expect to see at least a retracement to the 100 moving average. Back here in October, we tested close to the 200 MA. Also back in August, that event that I was talking about where the market did see a correction. And then back here in June, we also tested the 200 MA. So that's not out of the question to test the 200 MA. I'd like to see how we resolve this support level first, and then how we react to the 100 moving average before declaring the 200 MA the next target. Gold is obviously up. We have a position in GLD that's up almost 14% right now. Now, I don't think gold is going to increase exponentially further than this, right? I mean, you could see an increase in gold to levels that we saw back in 2012, 2013, but I don't think it's going to exponentially double from here. So it could be a safe haven to park some of your cash, but I wouldn't bank on targeting gold for major profits at this level. All right, let us go over Bitcoin. As I said, we swing traded Bitcoin earlier, 10% within minutes. Let me just go to a regular Bitcoin chart as opposed to XBT. And you'll see that Bitcoin, nothing really has changed from our analysis here, right? Bitcoin is still hovering around the 21 EMA. There is this hidden bullish divergence between the price, RSI, and MACD, right? The price is making higher lows. The RSI and MACD are making lower lows. This is called hidden bullish divergence. You see the golden cross between the 50 and the 100. Now, I did hear that in China, it is hard for people to buy Bitcoin now because they are suppressing the use of VPNs. Somebody correct me if I'm wrong on this. I don't know how true that is, but if that's the case, and apparently through a VPN is really the only way you can buy Bitcoin online in China. So if that's the case, that is why we are not seeing a lot of volume coming from China at this point. Now, Again, that's not verified. Somebody correct me if I'm wrong. But a few of the people in our Discord group who are in China or who have experience with China have mentioned that to me. But yeah, the outlook on Bitcoin hasn't changed. We're still in an uptrend. We're still retesting the 21 EMA. I keep saying this, but we can spend a week or two at the 21 EMA. We've done it before, back here in June 2019. We also did it in July 2019. So, Bitcoin doesn't need to, once it touches the 21 EMA, rocket ship from here. We can easily spend a lot of time here going sideways. And in the meantime, swing trading it before seeing a rally. Now, I've said before, I don't think that we'll hit 14K before the halving. Our target is somewhere between where we are now and maybe the 0.786 fib level, which is at around 12,400. I wouldn't be surprised if we stayed in that range before seeing a pre-halving drop and then gradually increasing to beat out previous highs. And yes, I'm even talking about 20,000. For those that aren't leverage trading, then Bitcoin is a definite hold for me here. I wouldn't do anything drastic with my spot position. But if you do want access to the leverage trades, link is in the description. Hopefully I cleared up some confusion as to how to handle the markets in the short term with the coronavirus news and the potential effects that it can have on the global economy. Leave a comment if you have a question, comment, agreement, disagreement. Hit that thumbs up if you got anything out of this video. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.